All right, thank you so much, Eni. In the global space now, it's still all about oil. At this point, the International Energy Agency says it stands ready to release more emergency oil stockpiles if the escalating Iran conflict deepens, and that's the global energy crisis. This comes after a record 400 million barrels were already deployed to stabilize markets rocked by supply disruptions and soaring prices. With oil flows through key routes like the Strait of Hormuz severely impacted, the IEA warns the situation could worsen, especially for vulnerable oil-importing economies as the world faces one of the largest energy shocks in history. And we see OPEC has cut its global oil demand forecast for the second quarter by 500,000 barrels per day as the escalating Iran conflict continues to disrupt energy markets. The group now expects demand to average just over 105 million barrels daily, citing weaker consumption across both developed and emerging economies. The downgrade reflects the impact of soaring prices and supply disruptions particularly through the Strait of Hormuz. However, OPEC maintains that demand could rebound later in the year, signaling the current slowdown may be temporary. And to Asia now, China's export momentum that slowed sharply in March, signaling growing pressure on the global economy. New data shows exports rose to just 2.5% year-on-year, well below expectations, while imports surged nearly 28%. That's the strongest move in over 4 years, 27.8%. They have for imports there. Normally, you would expect for a country like China, exports should, outpace imports. But we see exports there just 2.5% higher year-on-year, a sharp drop from 28.8%. That's between January to February. So definitely we're seeing the impact of the war in Iran already impacting a big industrial nation like China there, dropping their exports while imports are rising stronger, showing that there's a strong domestic demand right there coming from China. We also see shares of SK Hynix that surged to a record high, driven by strong investor optimism around artificial intelligence demand. The chip maker, a key supplier of high bandwidth memory used in AI systems, saw its stock jump as much as 9% amid a broader tech rally. Sentiment was further boosted by news that the SanDisk will join the Nasdaq 100 index, an inclusion expected to attract major institutional inflows. We see German government bond yields. We've seen that risen so far, edge higher across maturity, signaling rising borrowing costs in Europe's largest economy. The benchmark 10-year yield climbed to just over 3%, while shorter and longer term yields also moved up there. We see the 2-year yield 2.5 basis points higher, 10-year yield about 2.3, the 30-year yield. So the key takeaway there, you see yields rising across short, medium, and long-term debt. We'll definitely drill down on what's driving that. Then we see Bitcoin has surged to a one-month high, breaking above $74,000, actually to $75,000 as investor appetite for risk that's returned so far across global markets. Definitely still the same inverse relationship. Oil goes down, and we see risk assets going up. I hand things back over to Ini now.